Hi, my name is Layla Andrews and welcome to my weekly analysis for the week commencing the 17th of September 2017. Today I'm going to be looking at dollar yen, euro dollar and GBPUSD. Apologies for no video last week, I was doing something else. Okay, so this is the monthly chart for dollar yen and I want to talk to you just quickly about where we've come from and where we are currently placed within that context. So this is dated back to 1995. As you can see, we've been on a pretty serious downtrend, and in more recent time, after hitting the support level of 75.50 since 2013, we've been on a bit of an uptrend. So since we had this matching high at 125, we have been in a sell-off state. So it's from here that I need to talk to you about the more recent picture, and we're going to go a bit closer to the price action so we get a better read on that. And what I want to talk to you about is what this currently might mean for us. Sorry, I just need to center this. What this might mean for us at the moment. So this is how I'm reading it. We have had a rather deep retracement, but not the kind of retracement which is a game changer. It's a much higher time frame pullback, if you like. It could be for a quarterly chart or something like that. But we've had a reasonably good sell-off, and since then, since 5 months of testing the 99/101 level, we've actually been on a fairly momentum-based push higher. So this has brought us back over the majority of the EMAs, and particularly the 200, which is significant. And it took 3 bars to take us all the way up to retest what is a support level here, now as resistance at the 1850 level. This is 1850 just here, this dotted line. So since then, it's taken us about 9 bars, we're currently in the 9th bar, to travel what is just over half the distance of what it took 3 months to travel upwards in. So there's still, in my opinion, a degree of residual bullish momentum that is still making a strong defense for every time this market tries to sell off, hence why you get quite a lot of tails. So every time it sells through to a support level, it gets pushed back. Unfortunately, it also happens the other side as well. So we end up with quite a lot of consolidation, and as you can see, the majority of the bodies wind up in this sort of midpoint, which is around about the sort of 109, 111 area through here. So this is basically where price seems to keep getting caught. Now at the moment we've got this green bar with a long tail, which is a little bit deceptive. It can be careful of looking at current months that are in the process of building their price action, because they can subconsciously lead your thinking, and it's quite a dangerous thing to do. We have to look at the month before, and this bar, yes, it has a little bit of a tail on it, but still this could end up being indicative of bearish price actions. At the moment we don't really have a strong read on this. What I can tell you is that it's tested the 50 on 3 occasions. Dollar yen has tested the 50 EMA on the monthly on three occasions. So there's clearly a well-defended point here, and we can't afford to ignore that. So if we look at the weekly and get a little bit more information, do just take a note of the fact that these long spikes on either side of the market actually correlate with the cycles, which is these, on the weekly chart. So it's a little bit more detailed, so it's a little bit easier to read, but something that I want you to notice is the fact that this particular market, I'll just reposition this particular market has been attempting to cycle lower by making lower highs here and lower lows. However, even though this market is making lower highs, the lower lows keep ending up in a sort of matching position. So this is clearly indicative of there being quite a strong floor at this point. Now, the thing that I would like you to notice quite considerably is the fact that on 4 occasions, that's 4 weeks, that's a whole month, this market's been trying to stamp through this 200 EMA, and in fact it did manage to pull it off. Now you'd think that after this many attempts of trying to break through this 200 EMA on the weekly, that a sell-off like this would possibly result in a continuation. Instead, we end up with support, as I said, at 107.50, and a significant game changer type of price action occurs afterwards. It's almost, well, not almost, it has completely reversed this particular price action. The reason why this is important is because logic would dictate that after a sell-off and a pullback and a push through, you would see some continuation of this move, but there hasn't been, which means that this is an incredibly well defended zone, particularly the 200 and of course this support level which runs through here to the left. So this means that there's potentially a lot more bulls in this market for the dollar, that is, to push higher. Now we've got to get through quite a few obstacles. It's already closed above what I consider to be a sort of soft central range point, and most ranges will have a high and a high range point, a low range point, and what I would call a mid-range point. So the mid-range point for here, I'm estimating at the moment, is about 110.65, and we have just closed above it. Now do consider this price action here is pretty large compared to pretty much every other bar that's been in its recent history. So this is definitely signs of a clear amount of bullish momentum to the upside. And whether it's got the strength to continue this is what we'd have to be looking out for. So at the moment, I just want you to consider these levels. The next level that price might be trying to head to is the 112 level, and then of course it's the matching high back up at 114.50. So that's potentially what I'm seeing. At the moment, there is a bit of what I'd call sort of two sides of the argument scenario going on. And one is that we've had all this momentum. This has been a fairly sort of non-existent downtrend in a way. I say non-existent from the point of view that it's been taking an awful lot of time to not travel as far as it could have done, and it's really not taken up some of the opportunities that have been handed to it. And then of course we have this very, very, very bullish price action for the last week. So this somewhat implies that perhaps this is about a process of winding out from a small downtrend back into an attempt to attack these two levels, which is, as I said, 112 and 14.50. So we need to watch out for indications of what that might be bringing in the near future, and for that we need to have a quick look at the daily just to see if there's any further information. So on this particular occasion, this is actually probably one of the less attractive charts I've seen in a while, and I would imagine that anyone else looking at this market would probably think something similar. But I think what we need to take note of is that we've got here, and this of course is shown on the weekly with the very large green bar, but just look at what we've got here. We have definitely got quite large daily bars running through here. We've had a little bit of a pullback, testing into what is now the 10 and the 20 wrapping themselves around onto the right side of being support. So the 10 is now directly under price and the 20 is just coming underneath it. So that in itself has a little bit of a bullish indication. So what we might find is that this is a push up, a pullback in order to try and continue higher. But it's obviously got to get through this 200 at the moment. Now the 200, as I can see historically, it is used, but it doesn't seem to be a point at which it's not behaving like a brick wall. Sometimes EMAs do behave like brick walls, and you can see that historically that it gets very, very, very well respected. In this particular case, it seems to be a reference point for entering and exiting the market. So in that case, it's not going to be a difficult one to break, but nonetheless, I would want to see price above here before I'd start thinking about taking it long into, as I said, 112 and possibly up to the matching high. Now, if we do get a push through and we start getting good cycles into the 114.50 area, there is a chance that it might try and break through, but I think that's a case of something we'd need to discuss nearer the time, because at the moment I can't predict that whether that will happen or not. But certainly those are the two levels to get through. Right, now let's move on to euro dollar, which is here, and let's just look at the monthly. So again, I'll just give you a quick background on the context. I know some of you have seen this chart quite a few times, but for those of you that are seeing these videos for the first time, I just want to give you some ideas about why we are looking at this in a certain way. So we've been in a large range, and we broke out of the mainstay of the range, which I would have called 1.15. You could of course describe it as these highs, but I'm looking for the point where we've generally had the most touches, and I decided, for me personally, that 1.15 was the level I needed to break. So we've basically been buying since 105. It's been buying all the way. So for reasons that I think most people could agree is pretty logical, this market may need to take a rest, and it's come into a zone which is about two things. The first thing it's about is this line at 1.19, which is to do with this spike low. And markets do often need to reconnect with previous price action. It could be years, decades, months, doesn't matter, but bars do need to reconnect with previous areas of support and resistance, i.e. price levels, highs and lows like this one. So I would have said that this is definitely an area where price would find it interesting. We've also got this push low here, which is basically supported in kind of general terms around the 119 and 120 area. So then, of course, we've come into the 120 area, which didn't necessarily have a nice decisive low like this one did at 1.19, but it definitely is a psychological level. We would have moved out of the teens, if you like, and moved into a next set of numbers, i.e. 1.2. So it is rather significant. And as you can see, the market is stalling. So if the market is taking a logical breather at a level of resistance, then there isn't anything here that is behaving strangely. And what I would generally expect to see, and this is by no means me making a prediction on this exactly, but I wouldn't be at all surprised to see the market take a bit of a breather, tiny pullback, and attempt to attack this level again in order to connect with this level here at 1.24, which also connects very nicely with the monthly 200 EMA. Of course, if you have an SMA or you're using other types of moving averages, you may have a slightly different position, but this is an EMA, so it's positioned approximately at 124. So that's where I think that the market might be heading towards in the longer term. How it gets there, well, that's probably what we'll have to work out on the weekly and the daily as the weeks and as the days and weeks go past. But for now, we are stalling at the psychological level of 1.2. So let's have a look now at the weekly, and let's get this in position. So here we can see that this particular chunk of the market is visually very different from what's been going on here. A lot of these bars were overlapping. Obviously it's a range, it's consolidations, it's choppy, sometimes it moves, sometimes it doesn't, and you can see areas where it has tried to trend. But nothing in here looks like this. And when a market starts to trend properly, which this is, it can actually start to draw in its own momentum. And because it's quite stable, it doesn't need to make huge aggressive moves. It just basically chugs along quite nicely, and people get in and out of the market on a regular basis, and they're not uncomfortable about re-entering the market. So it tends to be a sort of bit of a self-fulfilling prophecy, if you like. Once a good trend gets going, they can often go on a lot longer than we expect. So this is a nice example of a trend. The EMAs are in a good position. We've got the 50, the 20 and the 10. They are fanning out, they're nice and smooth, but they're not too wide apart, which shows that there is not overextension, which of course goes again to me saying that this is a nicely behaved trend, which is not trying to push ahead too fast, too hard, and basically put itself in a situation where it has to make a massive sort of pullback in order to take the pressure off what is a market that has gone too far. So at the moment, it is stalling a little bit around about 1.20. So I would definitely consider this a level that needs to be considered as the make or break level. And we can get a little bit more information of that by looking at the daily. So we just move over. And this is important, and I think this is something that can often get missed, and it's this concept of logic. And I've talked about this before, but I'm going to go through it again. And it's basically that if you've got a trend, you have push-ups, pullbacks, all the way up, and here as well. And generally, we're supported by the 10, and on occasions by the 20. So this market is habitual. It's got habits, and we can see those historically. And it's done it again here. Pushed sideways, found some nice support on the 20, and pushed up. Now, this sell-off here that gave us this pullback was still part of a higher high and a higher low, so logic dictates that the market should go again. The trouble is with this is that you see this high here and this high here. There's not a great deal of distance between them. This one is not much higher than that. So you'd really think that with a trending market where it's been handed an opportunity on a plate, especially with this kind of big bar here, that it would at least try and take a bit of a move higher up into some numbers past 1.21. And it didn't really do that. And what you've now got is you've got a buying period that's been almost equaled by a selling period. In fact, it's done it in less bars. So this is now something that I would notice. The lack of distance between these two and the fact that this selling has slightly increased. Plus we are very, very slightly below this 20 EMA, which we haven't been in recent times. Yes, we were down here, but since then we've pushed away. Whereas here we sat on it and it didn't ever break through. As in close below, and here we have a little bit. So I'm now starting to look at this and wondering if what we're going to end up with is, and I can't tell you how many times it might do this, but it might be needing to chop up and down in a cyclical manner while it kind of gradually rolls over at the 1.20 level. The reason why we are looking at this in this way is because we know that 1.2 is a psychological level, and so therefore we won't be the only ones who know this, and we need to watch the change in the price action. There is not so much upward momentum, but we are still in the rules of a downtrend, and it hasn't yet been violated. So this market will still try to attack this level at 1.2, and it's really about how it goes and does this next. Is it going to push up through, make a new high, pull back, retest the support and get going? Because that's the ideal scenario that I'd like to see in order to think that this is going higher. If not, and if what we end up with is a lower high or chopping sideways or just general sort of rolling over and weakness, then I would expect to see a much deeper pullback. Now, where this is going to go to, we'd need to really probably look at the weekly to make a decision on that. And in many respects, it's very likely that if this is going to chop sideways, it will eventually meet the 10. So I don't see an incredibly deep pullback at this stage. But it might well meet the 10, which could of course fuel another move to the upside. Now, the way that that's going to work out is either it's going to push it through the 1.2 level, or it's going to create a matching high, in which case, beyond a matching high, and we are talking about this going sideways, the 10 getting underneath, pushing up, making a matching high, and then falling over quite a lot more dramatically. At the moment, what I'm seeing is a market that might struggle a bit at 1.2, but the point at which the 10 EMA connects with price action is very likely going to be a point that lots and lots of participants in the market would see and take that as a buying opportunity, because we are in an uptrend. So it is the logical thing to do. So do be wary that 1.2 is definitely a level that you need to consider, and certainly if you're going to be selling from there, you need to make sure that you've got enough room to the downside, and if you're going to be selling, you certainly need to make sure that you've got enough room to the upside, or wait for it to break one way or the other. But at the moment, this is still an uptrend, so it needs to re-attack this level, and how it goes about doing that is going to be shown up, as I say, probably on the daily. So let's now look at GBP, if I can get that to open. Yes. So GBP has basically been moving upwards in a fairly actually, I hate to say this because it didn't necessarily look like it at the time, but this is actually not a bad trend. It shows up better on the weekly and the daily. It's actually not a bad trend in itself. So of course, as I said before, we have to be wary of trends that look good, because well, not wary, I mean, they're great if you're trading in them, but if you're on the wrong side of the market, something that starts to trend nicely and is going against you, don't expect that to turn back just yet. So here we are, we have this month's bar, which of course, as I say, on all of these bars, can't give it a read yet. We've still got just under 2 weeks to go before that's completed, and it could look very different. But do note that we have watched price climb through the 10 EMA and attack the 20, and now it's broken above it. And that is not insignificant, where we've gone from a market which has completely respected the 10 and the 20 as resistance, has now actually reversed that to some extent by using the 10 as support and now the 20 as a resistance, which is the key resistance to break. So let's just go in a bit closer. So here we have the 20. I think this is possibly, and I do think this is something we need to think about, this might present longer term resistance, i.e. what could happen is if this market pulls back and pulls back into below this and actually closes below the 20 EMA at around about 133.45, if we close below this 20 EMA on the monthly chart at the end of September, this could be indicative of a deeper press lower. So do watch out for that. But at the moment, this is a bullish market and we have to read it as such. So let's now go to the weekly. So as you can see, now we can see a bit more of the trending activity that's been taking place, and it's quite neat. It's fairly repetitive. There's definitely some rhythm to this, which does help. However, I would say it was not a comfortable trend. It never really moved away in any great way, and then the sort of pullbacks were quite deep. So this is indicative of a market that really struggled to move higher, and you could say the fact that it managed to move higher at all is probably representative of the strength of this currency. The thing to notice also is that once we'd got from being below the EMAs to actually using them as support here and here, the market really took off, and we've had a fairly vertical move right past the key level of 135, and that was significant. That represented the sort of high point of this range that we have here on the left, and it's broken through it completely. And don't forget, of course, this is a weekly chart, so this close above 135 counts. That's a locked down bar, as it were. And naturally, it's gone straight into the round number of 136, or 1.36, sorry, my apologies, 1.36, and it's holding underneath there at the moment. This is it's a fairly vertical move, but in terms of the weekly chart, this is not overextended. It could still move higher and not be out of range, if you like, from the EMAs. Obviously, price action likes EMAs and it likes to pull back to them, but we've still got room to move. This is not an overextended market. Do take note of the fact that this consolidation here was previously considered to be the area that this particular market was going to be coming into, and it could find it problematic. It was possibly going to get stuck in there, potentially around the 133 area, which is more or less the midpoint of this range. Completely blasted through it, no reference to it whatsoever. So that's been taken out entirely. So the thing I need you now to look at is where we might be going. So of course we've closed the week under 136. Sorry, 1.36, and there's nothing really ahead of us apart from this low here, which corresponds very nicely with a fib retracement at 618 at the, what level is this? This is the 1.3850 level. So around here is certainly a point in which the market may connect with. There's a couple of ways in which this could go. It's either going to have a little bit of a pullback from here and then reattempt to take out its current high, and therefore connect with this level that I've just been describing at 1.3850. That's one way in which it could do it, or it could just carry on buying. As I say, if it was hugely extended rather, then a pullback might be a little bit more on the cards. But because it's not a given that this won't just keep carrying on. So the only way that we can really ascertain what its characteristics are is if we go down to the lower time frame. So we'll go down to the daily, and this is a fairly sharp move, and this is where we do see that there is a tiny bit of overextension on the daily. So what we might need to see is a pullback into the very least 135, possibly even deeper, where it needs to make some sort of connection, probably with the 10 EMA, very likely. So where would that bring us to? About 134. So effectively what we need is a pause that allows us some breathing space, possibly 2 or 3 sell-off bars that connect with, as I say, anything between 135, in which case it's probably going to be 1 bar, or 134, or potentially this high point here. But mostly it's about connecting with the 10 EMA. In fact, I just need to tell you what that high point is. If I get my cursor, that high point would be basically 132.50, 132.60, somewhere in there. So there's 3 levels to think about there's the 135, there's the 134 level, and then there is this 10 EMA possibly coming up to meet price at about, let's say the high point is 1.3270. So there's potentially an area there as well. It's only on the daily that you start to see that there could be a touch of overextension. And of course, do bear in mind that when you see quite large bars at the end of a move, it may be that all the people who were buying are done buying, so there's really no more new buying, which tends to mean that that automatically creates a bit of a vacuum, and the market can sell off quite dramatically, simply because there's nobody left in to hold it up. So that's why we have to be a bit careful of very extreme moves at the end of a run. So if the run started down here, had this little push, tiny little pullback here, and then got going, this is at the end of a run. This is the start of it, and this is pretty much the top of it. As you can see, this is a fairly decent move that it's been on. In terms of one direction, this would be a comparative move, and as you can see, it's quite a lot smaller than what occurred here. So there's definitely a lot of bullish momentum, but as I say, be wary of the fact that it might need to pull back and pick up a new set of buying conditions in order to carry on and attack its own high at 136 in order to connect with the previous low, which is about 1.3850. Okay, thanks so much for listening, and I look forward to speaking to you next week. Bye bye.